Hi, everyone. We are going to get started in a couple minutes. Thank you for being prompt, if not early. But stay on hold here for another 2 minutes and we'll get started. For those who just joined, thank you for joining. We're going to just wait a minute or two and then get started. Okay, Taryn, do we have a quorum, would you say? We can get going now?
Yeah, I would say so.
All right, thanks. Well, welcome everybody. Welcome to another edition of Innovo Benefits Group webinars. Today we are going to discuss the ACA once again. We've talked about this on and off for a decade now, but there's always things changing. So we have a guest speaker here today. I'll introduce in a moment. But just some housekeeping items. If you have questions throughout, please post them in the Q&A, not in the chat feature, the Q&A, and then we'll take questions at certain points through the meeting. At the end, we are going to have the codes for those of you getting continuing ed credits through SHRM, through HRCI. We'll have those codes at the end of the presentation. Also, at the very end, we'll have a very, very short poll just to make sure we're giving you valuable information in an efficient way. We try to always get very brief feedback from you. So when the meeting ends, it's going to be a very, very quick poll that'll pop up. So appreciate you in advance helping us out with that. Okay, let's roll. So, disclaimer. We're not providing legal or tax advice, you know that. But we have gathered as much information as we can to give you practical information and guidance. And if you have questions about this afterwards, feel free to reach out to us at Innovo or at BenefitsScape. Speaking of which, today's presenters include myself, from Innovo Benefits Group, and Andy Ferguson, a Senior VP at BenefitsScape. We've been working with BenefitsScape for a number of years. They've helped out our clients get through some sticky situations with ACA, and they've also been very helpful in proactively helping clients protect themselves and manage their ACA responsibilities. I'll let Andy speak about his company in a moment. Just a brief on Innovo. Most of you on here probably know us. We're an independent brokerage firm that does a lot of fractional HR and outsourced benefit administration. We deal with the ACA on a compliance perspective, helping our clients be prepared. But we also help our clients through the year with their systems and looking at the reporting and the codes and all that type of thing. So the ACA does impact our work. And so thanks for joining us once again. And now I'm going to ask Andy to take over for a little while, introduce his company, and walk through some of the requirements. Before you go, Andy, I'll just say this topic today about the filings and what we have to file going forward and what we don't maybe have to submit to employees like we used to is something that keeps coming up this year. It's not necessarily brand new law, but it's something that folks haven't spent a lot of time looking at because it came up, some of it came up so quickly at the end of last year. So as you're getting ready to do your filings this year, we thought it'd be a nice time to review what the rules and regulations are, and we really appreciate Andy coming in to help us with this. So Andy, thank you, and go ahead.
Thank you, Eric. Appreciate that. Appreciate the opportunity today to speak to each of you. And just briefly about BenefitsScape, we've been around for a number of years, and more importantly, we're involved in the Commonwealth of Massachusetts Health Place Connector. Our patriarch and founder of the business, Ken Phillips, played a major role in helping the Commonwealth get that connector established. So once the federal ACA rule came around, we had a little bit of background there that was instrumental in having us help our clients. So not only are we an ACA compliance vendor, but we've expanded our offerings into other arenas such as HCM configuration and integration, where we're working with some of the major HCMs to assist clients with open enrollments and file feeds to carriers and so forth. So that's briefly it about our business, and we're located here in Natick, Massachusetts, and love what we're doing. All right, so in today's agenda, you can see we're going to cover a few different topics. First and foremost, I think top of people's minds, as Eric mentioned, is that Paperwork Burden Reduction Act, and what does that mean? Along with the Employer Reporting Improvement Act. We'll discuss next steps for you guys as employers, about a good game plan to prepare for the tax season, the filing season, and then we'll finish up with some maintenance and reporting and testing regarding ACA. But hope to make it interactive to some degree with a chance for questions and polls. So I will allow Taryn to ask a poll question, and we'll just give it a little time for a response.
So I'll just add that on this poll, go ahead and answer it. We know you might not know enough to make a decision, but we're just curious if people already know enough to know whether they're going to make any changes. Good response. Tells us, Andy, that people are waiting to see. Let's see what you have to say, Andy, and we'll make our decisions. All right.
All right. Well, I love it. The undecided is kind of what we figured would be the majority response, because not enough of us really know the exact detail on this. And as Eric had mentioned, this Employer Reporting Improvement Act was only signed into law at the end of December 2024. And it did not give employers a lot of runway to really plan properly. Now, the story is much different for this year. So the expectation is that, well, let's see what this is all about and find out if it's a good match for each of you as employers that are required to report. And I think the first reaction for me is, well, yeah, absolutely. This is finally some legislation that seems to be favorable to the employer. And we'll get into some of that detail. But essentially, this federal distribution rule change is explaining that no longer is there an automatic requirement to print and mail and furnish those 1095 forms. And there's some stipulations and rules regarding if you'd like to take advantage of this Paperwork Burden Reduction Act, which we'll get into in a little bit. But the important thing to remember in viewing this slide is that the actual filing requirements remain unchanged. This has to do, if you remember, there's two basic deadlines. Furnishing forms generally by either January 31st or around the 1st of March, 1st or 2nd, depending on the calendar year. and then the actual filing deadline, which is historically the end of March, March 31st. That March 31st filing requirement does not change. So let's talk a little bit more about this change in the furnishing. So we can go to that next slide, I believe. Yeah. So this is just a little chart about showing the differences, right? And as I mentioned, this came into effect in December of 24. We actually had a client, a major hospital in the New England area, that took advantage of this, and they were very successful in the response. They avoided, printing and mailing roughly 30,000 employee forms. And then in terms of the actual, request to get a form, it was in the low 15% out of that population that actually reached out and wanted a form. So that's interesting information. But if you can see the form distribution, hey, before 24, you automatically had to get that furnishing done. After 24, it's only upon request. In terms of notifications, there was no notification requirement unless you were trying to take advantage of the e-delivery, which required consent in order for that to be done. And now, after this act comes into play, what you're required to do is put a clear and conspicuous notice. And we'll get into a little bit more of the detail on that as we move in further, but that's really the requirement. And then there's some deadlines and dates, or when somebody reaches out, you have to respond within 30 days. And then again, the important thing to remember is these state mandates. The states themselves have not really ruled or commented yet officially on this change federally. So we're going to make some, potential recommendations on how you may want to handle that regarding taking advantage of the Burden Reduction Act and also making sure you're compliant with each of the states. All right, let's see what's next on the slide. All right, just some ideas on why you want to do this. Hey, go green, right? No more paper. Many of your HR departments with the return mail experienced a fair amount of volume of bad addresses and getting mail sent back to you that you no longer would have to deal with. You'll save some money, of course, printing and postage. There's some strict print deadlines you no longer have to meet. The idea of employees reaching out that may have been looking for a form, I never got it. And then I love this one. No more EE confusion. Why am I getting this form again? Do I need this for my taxes? And of course, there's some answers to that, but federally, it's no longer required when you're preparing your tax returns. And then also people tend to, in this day and age, be able to track electronically a lot better than boxes and reams of paper and things that they would have to retrieve. So we feel like it's a really nice opportunity to do what you need to do to take advantage of this wonderful legislation.
Andy, we do have a couple questions if you wouldn't mind taking a pause.
Sure.
Okay. First question is, if an employee is terminated, I would assume we are still required to mail them if they no longer have access to the portal where they would be posted.
So that's a great question. There is no language regarding that. The language on the clear and conspicuous notice says that it needs to be available to any individual that would be receiving a form, which could mean an ex-employee. So the clear and conspicuous notice generally is required to be on some sort of public website as opposed to strictly, say, an internal intranet site. But that's a great question. And from a compliance standpoint, this is, and I just want to clarify again that disclaimer earlier on, and the fact that I am not an ERISA attorney. I just have a lot of experience in dealing with compliance regarding penalty remediation and so forth. So one of the methods to use could be, hey, for any terminated employee, I'll ask my vendor to go ahead and print and mail those also.
Yeah, and the second question is right along those same lines, basically. If we have information available in our HRIS or payroll system that individuals have access to, whether they're active or not, they could be terminated. Is there a need to print, or can we just direct them to the system?
You can direct them to the system. Yeah. Yeah.
Thank you.
Some ACA compliance vendors, such as BenefitsScape, will provide as a service, the links and so forth to handle also the fulfillment on the requests. So that's something to consider too. Okay, great questions. Thank you. Okay, in addition to that Paperwork Burden Reduction Improvement Act, right, there's an Employer Reporting Improvement Act. And there's 4 key points here. And number 1, we talk about TIN substitution flexibility. Now, this is an interesting one to me because when I first read it, I figured, geez, this must apply really to most likely dependents or individuals that are enrolled in a plan that requires reporting for those employers in the self-insured, offering a self-insured group plan, for example. Maybe it's okay just for the dependent not to have an SSN, but rather a date of birth and name associated. But I find it really hard for an employer to be able to hire somebody that does not have some sort of TIN number. So it'll be interesting to see which employers can actually take advantage of this. Number 2, electronic delivery. This has to do with consent, whereas in the previous language in the IRS rules, it was required to have this for each tax year. So you'd have to renew that consent every year. And now with this Employer Reporting Improvement Act, it allows it sort of roll forward depending on which year they're going to receive a form. All right. And then what's really nice, this happens in the penalty remediation side, is when an employer would receive some sort of notice. And the most common notices we've seen are the letter 5699, which is the IRS reaching out and saying, hey, we don't have a record of your filing for this particular year. Could you please respond and check one of these 4 boxes? Or the letter 226J, which is often an actual penalty that's assessed in that letter regarding non-compliance for either the A penalty, meaning not offering, minimum essential coverage to 95% of those full-time employees you were supposed to, or that B penalty, which would be related to a penalty where you did not offer affordable health care to a full-time employee for a particular month. They may have received a premium tax credit, and you can be assessed a penalty for that. Before this came into play, the employer had 30 days to respond. And as you know, forensically, to do all the proper research to potentially try to adjudicate that penalty, you need a little bit more time. And often these letters end up on an HR person's desk, and maybe they're not the proper person to respond, and they get lost in the shuffle. So this 90 days is a big, big improvement and very well received, and much easier to administer. Then also, it was always unknown, well, how far back can the IRS go and give us a penalty regarding one of these filings? And there's now a 6-year statute of limitations to assess those penalties. And as you can see in the language, that date starts from either the return's due date, or if it was done late, its actual filing date. But that's super helpful too, in this day and age of HIPAA compliance and personal information and being really sensitive to all those very stringent requirements of storing data. As you can imagine, it probably makes sense to hold on to the data for at least 6 years regarding the ACA compliance in case you ever need to go back and help adjudicate those penalties. All right. Next steps for employers. So what do you need to do if you'd like to take advantage of this wonderful law that was signed into place? Well, number 1, you got to have a notice of availability. And again, so they give some general guidelines, a clear and conspicuous notice of availability of the forms. And the notice must include instructions on how to make that request, including a phone number and a mailing address. So again, they're being sensitive to, people that may not have access to certain technology so that they would be able to make a phone call to request it and or send a letter in requesting their form. And then in terms of time frame, this notice for this year has to be up looks like by March 2nd of 2026, and needs to remain up until October 15th. And that October 15th date seems to be like it's going to be fairly consistent each year. All right. And then, of course, a timely response. If an employer requests a copy of their form, the employer must provide the request within 30 days of the request or by March 1st of the following year, whichever is later. Okay. Keep in mind that some of the ACA vendors that may be doing this on your behalf may be able to assist, or in the case of Innovo, where the guys have a good understanding of compliance, they can help you with a templated piece to put up on your website. All right, now, as of July 30th, all we know regarding those states with the individual mandate that also require reporting is that they have not changed anything, particular California, New Jersey, and Rhode Island. DC has gone on record that they follow the federal distribution standards. So I think in this instance, what we're suggesting at this point in time, again, it's September 9th, and there's still some time to react and make some changes if needed. But for now, what we're going to do is we're going to parse out the people in those states that need to receive a form. We're going to go ahead and print and mail those forms on behalf of our clients. And the entire population, of course, will be available for electronic delivery. Now, for many of you, it could be as simple as generating those PDF forms, storing them on your site, and just simply waiting to see if anybody makes a request. And if they do, numerous ways to do it. If they're agreeing electronically, you could share it via email, maybe able to download and hand deliver. If for some reason somebody asks for the actual printed and mailed copy, it's probably fairly easy to do because I don't think you're going to see much volume regarding this. Some ACA vendors, including BenefitsScape, will handle all of this on your behalf too. Okay.
So this is a really interesting point, huh, Andy, that, you have this easing of the federal rules, but we have the states that haven't necessarily all gone along with it. So for most companies that have a national population, they're always looking for a national solution. And we may not have that. And so then the question is, well, if we have a significant California, New Jersey, and or Rhode Island population, how much effort are we saving by not just sending them out to everybody versus sending them out to the other states and not sending them out to these states, not the other states, but then we have to put up that notice to the other states. And then you mentioned what, 15% of people in your experience when given the notice of availability actually asked for it. That was higher than I thought. 50% actually want to see that thing.
Yeah. Keep in mind too, in the Commonwealth of Massachusetts, you have that unique, 1099 HC, which some of the local people are familiar with, So there's a little more sensitivity in the Commonwealth to, I got to get that form that shows that I have healthcare coverage. Of course, it's really, it's supposed to be that 1099 HC, but.
Yeah, that's a good point.
Yeah,
So
but
they think they need it for their tax filing, so that's maybe why they're asking, if they're Massachusetts folks.
Yeah, it's interesting too. We've seen some individuals say, oh, my accountant still needs this. He always asks for it every year. And again, it might just be the practice where it's really not required in the federal return. But, we know there's so many different nuances in this arena. So, one of the things I don't want to sound salesy, but we have more of a white glove service that we do where you get assigned a client manager and we can handle these little nuances. We basically try to take this burden off of employers and allow us to do the work on their behalf and handle that furnishing.
Is there any whispers as to whether these states are going to allow for this new process?
Yeah, I was kind of hoping that we'd hear by now, Eric,
Yeah.
and they've been pretty quiet. So one of the things, of course, we do is we stay on top of all those new compliance issues, and as soon as we hear of something, we would notify everyone for sure.
Gotcha.
Yeah.
Just one other question too, Andy. Is the Paperwork Burden Reduction Act indicative that the ACA is going away?
Boy, you know, that's a really good question. My quick answer is no, absolutely not. I think the success of the Affordable Care Act is that a lot more people post 2015 are enrolled in healthcare coverage. So, you know, for a fairly wealthy country, right? I think this is a good sign. More and more people are insured. And so from just without getting into the politics, of course, it's been successful to that degree. And of course, the employers have bore a lot of the burden in this arena because of these reporting requirements, which is why I really love talking about these two new laws that were signed in. Finally, something that's a little more favorable. But no, I do not think that the ACA is on its way out at all.
I'll just add a couple thoughts on that too. While I don't foresee a overall federal overturning of the ACA per se, there are indications that elements of it will continue to be um, adjusted, let's call it, based on especially a budget. So, for example, we're seeing, as you may have read in the news, a lot of changes in funding to the states from the federal government that will start to impact people, especially on the subsidized individual market, starting in 2026. That will then have impacts to employer plans. So what do I mean by that? So an example is in January, there will be the legally present but non-citizen folks. There'll be a large population of those who will lose their subsidies on the state exchanges. And so those folks will then either need to pay full freight on the state exchanges, or they may look to go on to employer plans if they're employed, or they may end up uninsured. But we do see some impact there on the subsidy side as it relates to ACA that will potentially have an impact on employers. So if you have a lot of employees that have been waiving your coverage and you think they've got subsidies through the state, it's possible they may be coming back to you. Another area I would just keep in mind to Andy's point is that there are many pieces of the ACA that are universally liked, and neither party is going to want to take away, such as pre-existing condition exclusions. We used to have those things back when HIPAA portability was really important, to not have breaks in coverage, if anybody remembers. So no one wants to go back to those days where pre-X's are reinstituted. Nobody wants to go back to the days where there's a restriction based on your health, whether you could be on a plan. So there are certain things that are in place today. Caps on these ACA plans were removed, so no one really wants to put the caps on benefits again. So some of these things I don't see being taken away, but I do see, in terms of funding, that changing over time, and that can have an impact on us. And then on the business side, to your point, Andy, it would be nice to see more steps like this being taken to help businesses. One thing that's often been submitted as a bill is making the ACA reporting optional, voluntary. So that hasn't passed yet. So this is sort of a step in that direction. I know it's good work for BenefitsScape, and we add some value too, but I would support making all the reporting voluntary and removing a lot of this burden for employers. But that isn't there yet. It's possible that may come. Possible. Okay.
Thank you.
We are going to continue with another poll now. Taryn, if you go ahead and trigger this. Okay, we're going to talk about practical pieces for the next couple slides that we see in our work. But before we get going, want to know how satisfied you are with your vendor, whoever's doing the ACA reporting for you, the administration. How has it been going so far? And once we're finished with this poll, we'll just talk about a couple things that we see that might be helpful for you as you continue to apply these ACA reporting rules. Okay, let's see how it turned out. Well, good, good. You know, when the reporting first came out, it was really, really messy. No one really knew what to do. And all the HRIS and payroll companies were still building their systems. Over time, they've become better and better at it. They've built these systems, they can do the tracking that we're going to talk about in a moment. And so they've gotten a lot better at that, at the reporting. There's still, however, a responsibility from the employer in terms of oversight and overall compliance. We're going to talk about that in the next slides. But this is consistent with what we see, that the vendor market has gotten quite a bit better over time. Okay. So a few tips when you're looking at your ACA compliance. This is sometimes overlooked, just having an ACA eligibility policy in place. Why do you have this, and how is this different than what you might be doing today? I would say and Andy, feel free to jump in on any of these things. I know you're an expert in this area, but especially if you have employees who are variable hour employees. So if you've got employees that you don't reasonably know when they're hired if they're going to average 30 hours or more a week, it's really important to outline that you have that set of employees in your population and outline what you're going to do about them. Are we going to measure what their hours, and over what period of time are we going to measure? We need to also tell employees about this. I often talk to employers about their new hire materials, and when you're making an offer to somebody or you have some sort of employment agreement, I think it's helpful to identify if someone's being labeled as a variable hour employee and what that means. So what that means, you often refer them to the policy. And in the policy, you're going to do things like identify what variable hour means, identify for how long you're going to measure their hours going forward. Because typically, the variable hour employee, you're not giving them benefits right away, not medical. You're taking that wait and see approach. So you outline in the policy what that wait and see approach is. How long are you going to measure their time? And then once you measure, how long are they going to be stabilized? How long are they going to have that eligibility after you measure them initially? Then also you give yourself an administrative period to actually make changes after you measure their hours over a certain period of time. Also in the policy, you would show examples of this sort of methodology for existing employees. How are we going to treat you ongoing if your hours continue to vary from time to time? What's that mean for you? And then for new hires, how long should I wait until I know if I'm going to be eligible for benefits? So we want to tell them in that policy, give them examples. You want to tell them also what happens if I switch from full-time to part-time? What happens if I go from part-time or variable to full-time? Do I have to wait? Am I eligible right away? What happens if I'm seasonal and go to regular employment? Then what happens to my eligibility? These are things that are all outlined in a policy. Finally, what happens with breaks of service? What happens if I leave the organization? I was already full-time, but then I come back and I'm variable again. Do I have to meet my same measurement periods all again? What happens if I'm gone for a couple weeks? What if it happens if I'm gone for a couple months? What happens if I'm gone for a year? Because the answer is different in those scenarios, and that is all in your policy. Once you have that policy set up, especially when you have those variable hour employees, you want to make sure that your carriers and your other plan documents are consistent. They're either referencing your ACA policy. On the carrier side, you just want to make sure that your medical carrier understands what you're doing and is on board with that. Oftentimes they'll just defer, but you just want to make sure. And then you look at maybe your other benefit plans. If we're going to use this sort of methodology for our medical, do we want to just use it for dental and make it simple that way? Or do we want to manage dental differently because you don't have to do it this way for dental? That's often a philosophy question and also administrative question. And finally, and I don't want to say finally, but it's really important. Very, very often we see that the payroll HRIS system has different periods compared to what the client thinks they have. So we talked about those measurement periods above. You've got to look at what your vendor has in place in the system for the measurement period, for the stability period, for the administrative period, and make sure those agree, because they're going to be administering this for you. They're going to be measuring the hours, and they're going to have systems that tell you it's time to look at this person's hours over the first whatever 6 months, 12 months. So it has to match your policy. Once you have that foundation in place, I talked to our benefit administrators about this slide. I'm like, what are we doing through the year when clients ask us to help them with this? So these are things that come up across all the HRIS systems, making sure as you're bringing on your people that you're classifying them correctly as full-time or variable or seasonal. And if they change during the year, we've got to make sure that we classify them correctly in the system throughout the year. Also, this is an interesting piece that I didn't know about until I spoke to our folks. We want to make sure that the system reflects the offer dates of coverage and that the dependents are also offered coverage. So we're doing these things in preparation for people like Andy's team or the payroll company, whoever's going to be doing your reporting later. They're going to be pulling some of this data. We want to make sure the system reflects the coverage offer dates and also that the dependents were offered coverage, because that's something that comes up in reporting. Another thing that comes up in the systems is looking at your pay groups and locations and making sure that your system is capturing the correct hours across all those pay groups and locations. The hours of service, again, drives a lot of this, as well as pay codes. We want to make sure that your system is coded to correctly identify wages that will be considered when you're looking at the ACA affordability testing. If you might recall, the ACA says employees shouldn't spend more than X% of their income on the lowest cost single plan that's offered to them by their employer. Well, what percent, when you say a percent of their income, how do you define income? We want to make sure that the system is correctly identifying the wages that's also consistent with your policy and with the ACA. Is it W-2 wages? Is it the hourly wage? So there's different ways to categorize wages. You want to make sure your system is looking at the right definition. And then regarding the affordability calculations, I mentioned it's a percentage of income. One thing that we see come up a lot is you might hire some lower wage earners through the year and forget to check. So it's something you might want to trigger if you have any, or have a report. If you have any employees below a certain wage, you could set sort of a report so that if you hire someone below that wage, there is a report, something triggers you to say, oh, our ACA affordability may be tripped because we have someone below a certain wage level. So now our contributions may not be affordable to them. That sometimes is important throughout the year, not just at the end of the year when you're doing your reporting and testing. You want to catch it real time. And then reporting readiness, looking at errors and mismatches through the year. Sometimes employers will wait till the very end, and then you realize you have hundreds and hundreds of errors that have been accumulating in the system, and you have to figure it out. It's best practice to manage those errors within the system through the year so that when you get to the end of the year, you've got relatively clean data. And then you have that ACA, and then finally ACA tracking, especially for the variable hours. We want to make sure it's all set up ahead of the next calendar year, because that's when you're going to be tracking it going forward for your existing employees. Then once we get to the end of the year, this is where it's important to confirm timing with your payroll HRIS vendor. A lot of them have different, if you're moving from one to another, you should understand a lot of them have different deadlines. We've noticed, for example, Paylocity pulls their data really early in early January. So you got to make sure your data is clean and ready to be pulled by then. And then perhaps most importantly, testing. So when your provider tells you, okay, we've done the ACA reporting, we need you to hit this button, give us the go ahead, and we'll send it out to the IRS, we'll send it out to employees, or you can post that it's ready. In almost every case, we find there are certain issues. This requires a basic understanding of the ACA codes, but you got to know a little bit about it to be able to sign off on the files that the HRIS provider gives you. So when we're doing this, you want to look at different types of people, and these different types of people will trigger different codes in the reporting. So obviously you want to look at a regular full-time employee that's been there all year, just make sure the codes look right. But then you also want to look at those variable hours and those part-time people and see what does it look like for them in terms of the codes. Then we often see equity partners. So these are partners in a law firm, accounting firm. If they've been equity partners throughout the year, that's different than someone who was granted equity partnership in the middle of the year. So what does the reporting look like for the first part of the year when they were a regular employee? And then what's the reporting look like after that, once they're not an employee anymore? Because it's very different. They're treated differently. COBRA participants as well. You got to pick up a COBRA person and see, well, how did that reporting work when they're active? And then how did it work when they were offered COBRA, and then if they took it. If they didn't take it, you'll get a regular termed person, see how that works, new hires, and then folks on leaves of absence. So you want to look at that group as well, just to make sure that the codes are matching what they should. So that's generally what we do and what we recommend for testing before you give the green light to your HRIS or payroll provider. Okay, I'm going to pause for a second and see if we have questions. Anything, Karen, further?
Nothing new right now.
Okay. So a couple other follow-ups about our webinars. They're all posted on our Innovo Insights page on our website. So if you want to see this again, or you've missed another one that might be helpful to you, you can find them there. We have another webinar set up for October. This one is going to be a year-end checklist. We've done these before. It's going to be combined health and welfare employee benefits checklist, which includes some ACA items. And it's also going to include some general HR compliance items as well. So our fractional HR consultant and our benefits account management team will be presenting on a joint year-end checklist. So that's always a really popular session that will also be available for continuing ed credits. If you have questions for us, on the slides here, you'll see my contact info. Reach out to us anytime. You'll see Andy's contact info. Reach out anytime.